Welcome to FOMO Consulting for your daily AMC stock analysis video on Sunday, May 2nd. Today we're going to take a quick look at AMC theaters versus Cinemark and see why there is such a difference between the price action between AMC and Cinemark on a daily basis. Furthermore, I'll have a brief price prediction at the end of the video, and as always, the apes are winning, the diamond hands are winning, and the retail investor is winning. So if you find the video informative and entertaining, please like, share, and subscribe. It is a newer channel, and I would certainly appreciate the support. Let's get into the video. So first of all, thank you to everyone who has liked, shared, and subscribed, as well as commented. I cannot thank you enough from the bottom of my heart. So let's do a little side-by-side comparison. So AMC has a little over 1,000 theaters worldwide, a little over 11,000 screens worldwide, and they are mainly in the United States, Canada, and Europe. Cinemark has 531 theaters, 5,958 screens in the US, and a heavy presence in Latin America. So that is an interesting take, but AMC is approximately twice as large as Cinemark. So let's look at the key data here. Annual revenues last year for AMC, obviously both were heavily affected by COVID with the shutdowns in the United States, Canada, and elsewhere. Annual revenues for AMC reported were $1.24 billion for a net loss of $4.59 billion. Cinemark, $686 million for a net loss of $616 million. Both took a very substantial hit based on the revenues versus losses. Shares outstanding, big difference. AMC has 450 million, as we all know. Shares outstanding on Cinemark is 119 million. Institutional owners in AMC is 398. Currently, about 52 million shares are owned by institutions. The rest is retail investors, the apes, diamond hands, as well as many others. So we own the stock. Alternatively, Cinemark is almost, well, 100%, actually more, institutionally owned. They are actually 117% institutionally owned with 630 institutional investors for 139 million shares. That is more than high. So let's look at a couple other key data points here. Again, 79.2% of the shares of AMC are owned by the retail investor, apes, diamond hands, and others. Total volume on Friday for AMC was 26 million. Total volume for Cinemark was 2.8 million. So about 10% of the volume of AMC. Short shares available from Fintel, take it with a grain of salt, 150,000 for AMC. Short shares available for Cinemark, 1.4 million. Short volume ratio is only 9.3% for Cinemark. Only 259,000 shares were sold short as of Friday. The borrow fee for Cinemark is a ridiculously low 0.25% versus AMC's Fintel data at 15.03. So let's look at the price action from Friday. Obviously, AMC closed at a phenomenal $10.03, down 1.67%. Cinemark closed at $21.20, down 1.85% or 40 cents. Both were down after hours. If you can just look at those two price points based on the data I just gave you, obviously AMC twice as large, twice as many screens, certainly has been reopening faster, even under limited capacities, than Cinemark. If a pure logical perspective would tell you AMC should be above $20, and we'll dig in a little deeper to find out why. Interestingly enough, the 52-week highs, $20.36, obviously for AMC, the baby squeeze in late January, ironically, $27.84 at the exact same time on the exact same day. So Cinemark actually felt the effects of the baby squeeze and the major squeeze from GME and others. So it also spiked up on that very same day. AMC certainly took a lower hit at $1.91 throughout the past 365 days to $7.56 from a 52-week low for Cinemark. So let's look at the charts. Obviously, AMC, we've all seen this a million times, right? But certainly it has been suppressed heavily by the short attacks, the short interest over the last 3 to 4 months. Alternatively, when you look at Cinemark's chart, it is far more bullish, far more recovery based, far more like a normal stock chart would be coming out of recovery, right? And as you can see in that January period, you had that very tall red wick at $27.85. That was the exact same day as the baby squeeze for AMC, ironically. So let's look at them side by side. This is the yearly chart for both. Left-hand side is AMC, right-hand side is Cinemark. You can certainly see far left, AMC fell off the cliff due to COVID. Same for Cinemark. Cinemark actually took a much more dramatic tumble from its price point in the low 30s all the way down to $5. So it was a far steeper fall for Cinemark. But both stocks, everything to the left of those red lines on both charts, pretty well mirrored each other, right? They both had a few spikes about the same time, flowed down, spiked up again. But everything really past the red line, let's just call it early November, around November 1st, changed dramatically. Obviously, Cinemark has performed very, very well, trended upwards nicely. Obviously had the little baby squeeze in late January. Overall, it's kind of plateaued out at this point. And again, they are far, far behind on the reopening plan versus AMC. You can certainly see the suppressive action that has taken place on AMC, everything to the right of the red line. It is painfully obvious, right? So let's dig in a little deeper. So let's look at the Ortex data here. So AMC, this is the price action chart for the last calendar year. The gray bars is the borrowed share volume. You can see the first 6 months or so, relatively normal looking chart, nothing terribly crazy, a few spikes on the shared volume, obviously for shorting, but where everything really takes a turn is around that December timeframe. Obviously, the borrow volume just absolutely goes nuts on AMC. Obviously, you have the baby squeeze. It is heavily, heavily shorted, and we all know this. So one thing to note, utilization currently is 100% on AMC, and the cost to borrow is 13.58. Days to cover, interestingly enough, is 1.24, and I'll show you why that's relevant, and that is increasing daily. So let's look at a little closer timeline here for AMC. As you zoom in over the last, say, 6 months or so, it is heavily, heavily shorted. Obviously, the trend lines continue to escalate. We are 3 times higher than we were in early January on the shares on loan and the short interest. The shares on loan were around 50 million prior to the baby squeeze. We are now at 150 million. No wonder we're still in the $10 range. So let's look at Cinemark. So let's look at the price action for Cinemark. This goes back 1 calendar year, price action only. You can see the borrowed share volume, nothing terribly crazy. You can certainly see where there's small spikes in price. There's borrowed shares, they shorted down, but overall nothing terribly crazy. Where it's really, really different is the last 3 or 4 months. Certainly around that tall wick, let's call it a baby squeeze, they did not attack this heavily, borrow tons and millions of shares to short it back down. You can clearly see there's an honest amount of shorting, but nothing terribly crazy. If you think that AMC is not being heavily shorted and manipulated and pressed down, not only for financial benefit, to also, I believe, teach us a lesson, retribution from January for GME, AMC, and others, I think you might be mistaken. Clearly, the evidence would show different based on the motivation and the pure data going on at Cinemark versus AMC. One other or a couple other things to note: days to cover, 7.47. That's right, 7 days in 47 versus AMC, which just crossed the 1 day line. Now, again, it's all on how you calculate it, but Ortex is showing over 7 days. Cost to borrow, a ridiculously low 0.62. The utilization, AMC at 100%, right? Utilization is only at 35.64 on Cinemark. So huge differences in how these stocks are behaving, simply because of the heavy institutional ownership, 117%. There's very few apes involved in this stock. They're certainly not 80% holding it up. So the stock is certainly behaving very differently. Look a little closer. So you can certainly see where the short interest has obviously trended upwards just a little bit, but as I stated in my video yesterday, when you have that huge divergence, and again, this is not financial advice, it's just my opinion, when you get up, the short interest has a wide divergence from the price action, the price inevitably will chase that and find equilibrium, which is exactly what happened in late January. The price actually precisely met the free float on loan and then tailed off from there, and it's been pretty well flat since then. So big difference in the overall characteristics of this chart, of this company, of this stock, and it is very plain to see that AMC is being heavily shorted and manipulated. We are in a fight, and I have no doubt whatsoever AMC will squeeze sooner rather than later. So my prediction for the week, based on a lot of key factors, which is the annual shareholder meeting, earnings coming up, historical data around time of earnings, I do believe, again, my personal opinion, looking at the options chain, the sentiment, I just believe this is going to be a very green week for us. We should close, in my opinion, just my own personal prediction, of between 12 and 12.50. If we get above that point, I do believe we will start causing some sort of squeeze effect. I do not believe the shorts will engage heavily this week. Going into the annual meeting, there could be potential positive news catalyst. The earnings could beat expectations. I just don't think they're going to want to play heavily this week. And quite frankly, they're running out of ammunition as well. So I hope you found the video informative and educational. And if you did, I hope you please like, share, and subscribe. It would mean the world to me. But as always, I hope your life is full of green candles. I'll talk to you soon. Bye-bye.